Welcome, everybody. Good to see you again for another weekend edition of the Market Update. I'm just going to go over some of the headlines that have been in the news this week. And a big headline that's come up here, going to be taking a look at Google in the AI space. A lot of us have been banking on AI memory and things like that, NVIDIA. Apparently, Google's released some new technology, which is going to allow AI to work, I believe it says up to 6 times more efficiently. Let me take a look at this here. TurboQuant, a memory compression method that says they can shrink the KV cache used during AI inference without reducing the model accuracy. Okay, so anyway, if this is to be believed, can cut the working memory at least 6 times, which could lower the cost of AI models if it works outside the lab. All right, so anyway, some news. We're worried about how much water AI is using, how much resources, how fast we can go, if we're going to run out of chips. This is saying that there might be an answer. Google to the rescue. Maybe Google could be our savior when it comes to memory. Of course, not to replace our savior, but you know what I'm saying. But let's take a look. Let's see what's going on. Trump, his next big target in Iran is going to be the power company producers. So if you know anything about that, Trump is saying that his next crippling blow to the regime in Iran is going to be taking out the power plants and facilities. However, he's been reluctant to want to do that. I think part of it is he says he doesn't want to hurt the people, and he also doesn't want to hurt the recovery of Iran. So he backed off on that. He's giving them a little bit more breathing room. I believe he gave them another 2 weeks, possibly till about April 10th before things move. So we might have a little bit of calm in the markets over the next 2 weeks. Depending on what happens, that could either be a good market uplift, probably if the war ends, or if it continues and the strikes do happen, we might see a little bit of a market downturn in a couple of weeks. For people who like to gamble, I guess you could hedge your bets on one or the other. Well, I don't know if this is so exciting, but it says the Nasdaq's taking a tumble on tech sell-off as oil surges. All right, so if you were buying something based on the price of oil and everything, you're probably ahead. But if you're just buying it for your car, like most of us are, a lot of money. So anyway, more news about how the Iran war is just making things better and better. Not really for most Americans, but I understand that most of the Iranian American people are quite happy, and they're hoping for that despotic regime to change over. Myself, I didn't shed any tears when I heard about the Ayatollah going into the next world. Okay, big news for Donald Trump. Gosh, this guy, he's got no shortage of personality or egotism, does he? He's actually wants to put his own signature on all the US dollars that are going to be produced starting on the 4th of July, celebrating our country's 250-year anniversary as a nation. I remember when we had the bicentennial, it was kind of amazing. We had all kinds of quarters that came out with people beating on the drum, celebrating the independence of America. Well, I guess this year we get to celebrate with Donald Trump's signature on our money. All right, are you excited? Just can't wait till you get that first $100, $10, $1 bill, or whatever it is with Donald Trump's signature. How about the coins? Do you think he'll put his stamp on the coins too? All right, well, more to be revealed. All right, thanks for hanging out with me today and hearing all about our country and what's going on. Now, I just want to go over what I call the yoga of investments. Before you ever make any big moves on your portfolios, I recommend you take a deep breath and look at some of the major U.S. indexes. Now, the 3 indexes I like to follow are the Dow Jones, the S&P 500, and also the Nasdaq 100. So let's take a look to see what's going on with the Dow this week. Over the 1 day, it took a pretty big tumble, 1.73%. Over the 5 days, it's down 1.39%. So really, from the beginning of the week, the end of the week, it's actually stayed down about the same amount. That means overall, starting from the beginning of the week, it's been about stable. We lost most of it looks in that first day kind of tumbled and stayed down. All right, take a look at the 1 month. We're down 7.78%. That's almost a year's worth of investments. Some people would say if you're expecting to get 8%, if 8% is realistic. The 6 month in the Dow, down 2.48%. So the 6 month is not as bad as the 1 month. And then the 1 year, we're actually positive 6.78%. All right, so not the best year we've had, but overall about 6.78%. How does that compare, I wonder, to the 5-year? We'll take a look at that in just a little bit. Right now, I want to move over to S&P 500, see how we did on similar time frames. S&P 500 down 1.67% today. Over the 5 days, we're down 3.13%. In the 1 month, we're down 7.41%. Kind of similar numbers as we're tracking in the Dow. Let's take a look at the 1 year. We're up almost 12%. Looks like the S&P's actually had a pretty positive performance in the 1 year, despite the downside volatility that we've been seeing over the 1 month and 6 months. Now let's move on to the Nasdaq 100. This has a little bit more of a techie flavor, if you will. The 1 month down about 7%, about similar to the rest of the indexes. 6 months down almost 6%. All right, let's look at the 1 year. How's it been performing in the 1 year? Does it get any better? 1 year has generally been positive for all the indexes. All right, now we're going to go back. We're going to start with the Dow. We're going to see how well it's doing on average compared to the 5 years. Okay, the Dow Jones for the 1 year did 6.78%. 5 years in the Dow did 36%. So 36 divided by 5 is about 7.5% or 7.2%, 7.3%, whatever that ends up being. So actually didn't do that much different. It has gone from 11.87 in the 1 year to, let's take a look at the 5 year, about 60%. So it's almost 12% this year. It's almost 12% a year in the last 5 years. So once again, similar performance. Okay, last one we're going to take a look at is the Nasdaq 100, 16.84% in the last 5 years, coming in at 78%. So actually the 1 year has done relatively well. Okay, so that's some of your market news for this week. Hope you're having a good week in the market. So if you're feeling like a little bit nervous about your money and you want to reach out to a financial advisor, feel free to contact me. I am open to helping people out, learning more about your finances and your coaching. All right, take care. Max Drew, CPA. Hope you have a great weekend. Looking forward to catching up with you next weekend on our market update. Okay, take care. Bye-bye.